Hello viewers, welcome to my channel. Today we are going to see in depreciation chapter practical sum number 1. A firm's plant and machinery account on 31st December 2021. You have to be very particular about the date. They have given the details on 31st December 2021 broken down by the year of purchase. Okay, so 2005, 11, 12, 13, the cost of the machine they have purchased plus the depreciation provision made till date of 31st December 2021. Now they are giving further information that the depreciation is provided at the rate of 10% per annum on cost. It means it is straight line method. The company's policy is to assume all purchases, sales, as well as scrapping or disposal is occurred on 30th June. Whatever the case may be, they are assuming it is on 30th June on the particular year. Whether it is purchased or sold or scrapped or disposed. Now, further information given during 2022, plant and machinery purchased for 15 lakh. It means they purchased it on 30th June of 2022. Then they scrapped one machine for 1,70,000. This is also done on 30th June of 2022. Scrapped means they didn't get any money. Another machine bought in 12 for 90,000, sold for 5,000. Another machine bought in 13 for 2,40,000, sold for 15,000. Now they have asked you to calculate the depreciation provision for the year ended 31st December 2022. Okay, in calculating, you should bear in mind the company's policies. Of course, we are going to keep it in a separate account. So they have asked us to prepare the ledger account, plant and machinery, depreciation provision, and disposal of plant and machinery account. So let us go into that preparation of depreciation for 31st December 2022. The first machine, if you see, in the year of 2005, 2 lakh rupee cost, this is totally depreciated. So we need not to depreciate further. We cannot do also. There is no book value left out. Already 2 lakh is depreciated. The same case for the machine purchased in 2011 for 3 lakh rupee. This is also totally depreciated. So provision is already available for 3 lakh. So further provision is not possible. Now the third one is in 2012 they have purchased a machine for 10 lakh rupee. So you assume it they purchased it on 30th June. So for the year ending 2012, you have to provide depreciation for 6 months. So 10 lakh, 10% is 1 lakh. So for a half year, it is 50,000. And further 13, 14 and so on up to 21, there are 9 years. So every year they have depreciated 1 lakh. So the total depreciation till 31st December 2021 is 9 lakh 50,000. So now what is the book value left out? The machine is purchased for 10 lakh. So book value left out is only 50,000. But we have to depreciate this machine for 1 year. So the depreciation will be again 1 lakh. But we are left out only with a book value of 50,000. How can we depreciate it for 1 lakh? So we can depreciate only with the value what is left out. So the value left out is only 50,000. So we are going to depreciate this 10 lakh machine for 50,000. Hope it is clear. Already 9 lakh 50,000 is available in the provision for depreciation. Further 50,000 is made in this year. Now coming to 2013, there are two machines. How do we know there are two machines? Because they have given the transactions during 2022. There is a machine costing 2,40,000 is sold for 15,000. You can read the question again. So now first machine 4,60,000. So we have to depreciate it for 10%. So what is the depreciation per year? 46,000. Again, as per policy of the company, first year it will be half year, 23,000. Then the remaining years, 14 to 21 is 8 years. Total comes to 3,68,000. You can do it by yourself for easiness and reducing the time. I have done it like this straight away. 3,68,000 plus 23,000. Already 3,91 is depreciated. So the left out book value is 4,60,000 minus 391 is 69,000. So we can depreciate it for the full year. Full year it is 46,000. So I am going to depreciate this machine for 46,000 for this year. Okay, because the book value available is 69,000. So second machine is 2,40,000. Again the same policy. First half year is 12,000. Another 8 years it is every year 24. 24 into 8 is 1,92,000. So 12,000 already in the year of 2013. Now for this year we have to do it only for half year because this machine is sold during 2022. So whenever it is sold on 30th June. So you can't provide more than that. Only up to 30th June, the machine was not available after 30th June. So 12,000. So the total depreciation comes to 2,16,000. So for the current year, the depreciation is only 12,000 for this machine. And here I wanted to tell you one more thing. The total depreciation is 2,16,000. After 2,40,000, the machine is left out book value is 24,000. This machine is sold for 15,000. So there is a loss of 9,000. This we have to book it to P&L account. Now coming to the next machine. This 90,000 also I wanted to tell you. However, we know the breakup. They have told that the machine purchased in 2012 for 90,000 is sold for 5,000. So 90,000, this is fully depreciated. There is no amount left out. But this is sold for 5,000. So there is a profit of 5,000. See, there is a profit of 5,000. So this we will come into our P&L disposal account. Now coming to the 2020 purchase, 5 lakh rupee. So we can depreciate it for the whole year for 50,000. Because this is still available. This machine is 3,30,000. But now coming to the machine which is purchased in 2022, again the company policy is on 30th June. So we have to depreciate it for 6 months from 1 July to 31st December. So for whole year it is 1,50,000. For half year it is 75,000. So when you total this, this will be the total depreciation provided for the current year. This comes to 2,63,000. 6 plus 2, 8 plus 5, 3. Yes, 2,63,000. This will be the depreciation provided during the current year up to 31st December 2022. Okay. So now they have asked us to prepare plant and machinery account at cost and disposal account and provision account. So balance brought down already they have given in the question. As on 31st December, the machine available was 30 lakh. And during the current year, on June 2022, they have purchased for 15 lakh. So total is 45 lakh. Now on 30th June 2022, they have sold, scrapped some machines. So this all these machines will go to your PN, plant and machinery disposal account. What are the machines are going? One machine they are saying that which was cost 1,70,000 is scrapped. Then one more machine for 90,000 they have sold it. And one more machine 2,40,000 was also sold. So the total comes to 5 lakh rupee. So 5 lakh rupee machine has gone to disposal account because this we have disposed and scrapped during the current year. So what is the balance carried down by balance? Carried down is 40 lakh. So this you have to write it as this is on December 31st December 2022. So this balance brought down will be, I have no space, so I am writing here. You write it neatly, January 1. Now this has gone to the disposal account. To plant and machinery account, we have sent it 5 lakh rupees. The first machine, 1,70,000, it is scrapped. So we didn't get any money on that. But the second machine, 90,000, we got in bank 5,000 rupees. Second machine for 90,000, already provision is made for 90,000. So there is no book value, but this was sold for 5,000. Another machine, 2,40,000, sold for 15,000. So in the bank, we got 20,000. And this machine, 90,000, already depreciated for 90,000. So there is no book value, but still we got 5,000. This is the profit. But this machine, the book value as on 31st December 22, I've already showed you 24,000. This is sold for 15,000. So there is a loss of 9,000. So I am netting off this loss and the profit. I am making it by P&L account. It is a loss. P&L account, 9,000 loss, 5,000 profit. So there is a net loss of 4,000. Now the balancing, always you know that this total amount will go out because this is sold or scrapped, whatever it is, the machine cost will go. So you need not to calculate, simply you can take the balancing figure as provision for depreciation account. Still I'll work out and show you 4,76,000. But in your exam, just to save the time, take the balancing figure. So 5 lakh. It will be correct. 5 lakh. Okay. Now coming to this will be in the provision for depreciation. Provision for depreciation, they have given you 21 lakh 35,000. This is the opening balance. During the current year, we have already calculated 2 lakh 63,000 for the current year. 2 lakh 63,000. So the total comes to 23 lakh 98,000. Hope it is clear for all of you. 23 lakh 98,000. Now, what are the provision for depreciation? Removed the machines which have been scrapped and sold out to plant and machinery disposal account. We have already written 4,76,000. The balancing figure, I'll give you the breakup also. First machine, 1,70,000. Machine cost, totally depreciated. So we have taken the next machine, 90,000. Totally depreciated, 90,000. The third machine, I have shown you here, 2,40,000. The total depreciation is 2,16,000. So this total comes to 4,76,000. Now the balancing figure will be here on 31st December 2022 will be to balance carried down 19 lakh 22,000. Okay. So this you have to write here as January 1, 2023. By balance brought down 19 lakh 22,000. If you proceed like this is an easy one. If you make practice, anything you make practice, you will be able to do it. If you have not yet subscribed, please do not forget to subscribe and share it with your friends and those who are interested. Please leave it in the comment box and don't forget to give a thumbs up, which will motivate us. Kindly give all your comments so that we'll be able to give you the right thing. Thank you for watching.